Good morning. It's Thursday, 18th July 2024. Welcome to the pre-market commentary. My name is Vijay. Let me guide you to what happened last couple of days and what we can expect today. Title, I have titled it as Confused Markets. I'm sure market watchers over the last 2 days must have been extremely confused as to where are we going or where are we now. Now, first, let's look at Indian markets. Day for yesterday. Yesterday was a holiday. So, day for yesterday, we had Nifty making an all-time high, led by oil and gas and other stocks. Reliance actually came down through the day. Bank Nifty did not do anything. In fact, it closed in the negative. So, confusion there. Now, to add to the confusion was what happened in the US. US Dow Jones went up by about 740 points on Tuesday. You had Nasdaq and S&P doing well, but not well enough. Now, yesterday, Wednesday, the European markets fell as usual because the European markets seem extremely weak. But the Dow Jones continued to go up. It went up by another 240 points. Nasdaq crashed. Nasdaq crashed by about 500 points, and all the semiconductor stocks crashed because there were warnings from both Trump and Biden that they will take action on China. So that was that. But also look at what happened to the small cap index, which is the Russell 2000. It has been going up. I think it's gone up about 10% in 1 week. 10%. The index has gone up by 10%. It is the worst of the three indices, but suddenly it has come up to speed. Now, if you really look at the scenario, it looks very much like this tech is falling means a bear market is upon us. Dow Jones and Russell is going up means bull market is very strong. Then you have the gold is rising means there is a recession. Oil is falling means again there is a recession. Commodities like copper and all have fallen about 4% this week, which signals recession. Whereas the Fed people are talking of a Fed rate cut as early as September, the market is now pricing even a surprise price cut on July 31st. So just look at this confusing scenario. I'm sure both investors as well as traders will be very, what shall I say, confused, shocked, dazed. You can use any word. But let's look at what's happening in India. India, FIIs have continued to buy. They're about 9 days out of 10. What I have observed is that whenever FIIs buy on a continuous spree, the market does not come down. When I say the market mostly Nifty will not come down so easily. So a lot of bears sitting on the sidelines hoping that today will be a peak, tomorrow will be a peak. I don't think it will be so easy unless the FIIs sell in large numbers. As of now, they're just warming up to India. For instance, yesterday, you had a town hall with Chris Wood on CNBC, and he's saying FIIs are underinvested, and he's a very influential voice. So if you go by what he's saying, then more money from FIIs would come in the next few weeks to months. As I said, the dollar index was weak, which is again very surprising. Gold, of course, made an all-time high, while silver is not getting any traction. Normally, silver should lead gold in this kind of market, but silver, for some strange reason, is not participating. I always considered silver like the recalcitrant teenager. Suddenly it will get up and work its way up. Now, Asian markets have been very dull. Nikkei crashed in the morning, around 900 and odd points, but it's now recovered to some 800 points, still down. So Nikkei is in bad shape. Why? Because the yen is suddenly strengthened. Dollar index is weakening. Yen which was 162 to the dollar, is now become 156, which is a significant rise within a very short span of time. Obviously, the Bank of Japan and the Ministry of Finance of Japan are very active in propping up the yen. Today is a weekly settlement, so you can expect more confusion, especially in the second half of the day. The good things are that on the macros, things are improving with RBI upping its GDP numbers for India from 8 to 8.2. Moody's has moved it from 7.8 to 8. So that is all very interesting. So therefore, I am feeling the way the market is behaving, at least the Indian market, leading up to the budget and maybe sometime after the budget, it should be strong. While I can't advocate anything because I'm not a SEBI registered advisor, but personally, me and my group are buying every dip. We are buying into oil and gas. We are buying into PSU banks. We are buying into textiles and pharma and paper. So these are the stocks and sectors which we have looked at, especially where P ratios are below 15. Most of the stocks which we have selected, P ratios are below 15. An odd Biocon has got a higher P ratio, but Biocon is one of the most hated stocks and it is not falling. When a hated stock does not fall, it is the time to be buying that stock. And it is fundamentally a good stock, a good company. It's coming out of its years of laziness. So I'm expecting good things from Biocon, but on a medium to long term. So today I'm going with a positive outlook. I am not feeling as bearish as many of my friends and commentators are feeling. I'm obviously bullish at least till budget, because right now it is not showing any sign where you see one should be cautious. Of course, the trailing stop losses, which I keep telling, are always there. Keeping those trailing stop losses, I am just looking at buying on all dips whenever they come. Whatever you do today, I hope it's successful. Thank you for joining me. It's Vijay here, signing off.